you want to be careful about trusting online mortgage calculators. So in today's world, there's a very good chance that if you're thinking about buying a house, whether it's next week, next month, maybe even next year, there's a good chance you're going to go online, you're going to start doing some research. And one of the things that you may come across is a mortgage calculator to help you calculate how much house you can afford or qualify for. And so it will ask you how much money that you make, ask you what you have in terms of debt, monthly debt, car payments, student loans, things like that. And then it will kind of give you a number of, hey, you could qualify for this much house payment. So it's going to take and calculate a percentage of your gross monthly income and tell you how much of that gross monthly income you can use towards your house payment. So I played with one of those today because I had some concerns, and sure enough, it was extremely conservative. Now, I don't have a problem if someone wants to apply that conservative approach to their own personal decision making. I don't want more than, say, 25% of my gross monthly income going towards my house payment. But the reality is that's not a possibility for many people that we work with anyway. We wind up seeing debt to income ratios that are going to be quite a bit higher than what we're seeing in this particular calculator that I played with today. And so the calculator is only going to be able to deal with a rule that's giving it. Whoever programmed it says the maximum would be this percent of their gross monthly income. However, those of us that deal with this every day know that those rules can be stretched. FHA, we can go up in some cases to 56.9% of your gross monthly income towards your house payment. Not ideal. And you definitely wouldn't want to program a mortgage calculator to give someone that answer, which would be the absolute most in the best case scenario, which a lot of people aren't dealing with the best case scenario. So if you're going to build a calculator, it needs to be conservative. I totally get that. However, if you want a really good picture of what you can do, it's ideal to get on the phone with a mortgage professional, someone who deals with people like yourself, and they deal with the guidelines day in and day out, and they have a really good grip on what it is that you would be able to do. They can actually take a look at your credit profile, run you through the automated underwriting systems, and see, is your debt to income going to be capped at 25%, 35%, 45%, 55%, whatever the case may be. But at that point, you're getting a you answer instead of a broad idea of an answer, a broad guess that's going to apply to a large group of people. You're getting something very specific for you. So if this is you and you are moving towards thinking about buying a house, somewhere earlier in the process, maybe earlier rather than later, you want to talk to a mortgage professional and let them do some calculations for you so you can know where you stand and you can make some informed decisions for yourself.